Hello, I'm the Northman. Welcome to your daily dose of crypto news. And this article is from Crypto News. It says Federate decision what to expect in crypto market tomorrow. Crypto markets are entering a sensitive phase as interest in Fed rate expectations and liquidity conditions dominate sentiment, setting the stage for a heightened volatility. Summary: interest rate expectations are the primary driver for crypto market sentiment. Liquidity conditions are shaping risk appetite across digital assets. Volatility is likely to increase as markets await macro clarity. The broader cryptocurrency market is approaching a pivotal moment as macroeconomics forces increasingly shape short-term price behavior. After a period of consolidation and uneven rebounds, digital assets are showing signs of hesitation as traders await clearer guidance on the direction of US monetary policy. Rather than moving into an asset-specific narratives, the market is responding to shifts in interest rates expectations, liquidity conditions, and risk appetite, reinforcing crypto's growing integration with traditional financial markets. Key macro and crypto market themes. Interest rate expectations will remain the dominant driver for crypto sentiment. Liquidity conditions are shaping risk appetite across digital assets. Short-term volatility is likely as markets seek macro clarity. Why interest rates matter for crypto markets? Interest rates influence the cost of capital and liquidity availability across global markets. When rates remain elevated or are expected to remain restrictive, investors often favor yield-generating lower-risk instruments, reducing appetite for speculative assets. Cryptocurrencies, which thrive during periods of abundant liquidity, tend to struggle in these environments. On the other hand, signs of easing policy or stable rates can improve conditions for crypto by lowering opportunity costs and encouraging capital rotation into higher risk assets. This dynamic has become increasingly evident as crypto markets react quickly to changes in expectations surrounding central bank policy. Liquidity is the common denominator. Liquidity remains the key variable linking macro policy to crypto price action. Tight financial conditions typically suppress trading activity, reduce leverage, and dampen momentum across digital assets. In contrast, improving liquidity often coincides with stronger rallies, broader participation, and increased upside volatility. Recent market behavior suggests that traders are cautious, preferring to wait for confirmation rather than committing heavily in either direction. This positioning reflects uncertainty rather than weakness, with the participants closely monitoring signals from policymakers and macro data releases. Risk sentiment outweighs individual narratives. In the current environment, asset-specific developments are taking a backseat to broader risk sentiment. Even projects with strong fundamentals or positive ecosystem growth have struggled to decouple from the macro backdrop. This reinforces the idea that in the short term, crypto is trading more like a risk-sensitive asset class than a collection of isolated technologies. Historically, periods marked by macro uncertainty have often led to range-bound trading and sharp reactions to news. This appears to be the phase crypto markets are currently navigating. Volatility is likely to increase around policy signals. Major policy signals from institutions like the Federal Reserve have consistently acted as catalysts for volatility in crypto markets. Ahead of such events, price action often compresses as traders reduce exposure and wait for direction. Once clarity emerges, markets tend to move quickly as positions are rebuilt. This pattern suggests that near-term volatility is less about trend continuation and more about repricing expectations. Breakouts or breakdowns driven by macro shifts can be sharp, even if the later resolve into consolidation. Longer-term implications for crypto. While short-term price action is often shaped by interest rate expectations, the longer-term outlook for crypto still depends on adoption, innovation, and regulatory clarity. However, these factors typically assert themselves only after macro uncertainty fades. Until then, the market remains vulnerable to sudden shifts in sentiment driven by economic data and policy commentary. What to expect in the coming price action? The cryptocurrency market is likely to remain macro-driven in the near term, with interest rate expectations and liquidity conditions dictating direction. Range-bound trading and sudden volatility spikes should be expected as markets react to new information. A clearer signal of easing financial conditions would increase the likelihood of a broader recovery across digital assets, while prolonged restrictive policy would keep risk appetite subdued. For now, patience and close attention to macro signals remain essential as crypto markets navigate this uncertain phase. And that was the article. I hope that you enjoyed it. Of course, do your own research as always. That is pivotal for your well-being and for your own success and for your understanding in the market. Of course, like and subscribe for more content like this. And on another note, yesterday I bought some new gear that will be sent by mail to me in the coming weeks. And then hopefully you will hear a better sounding audio quality that will make both your experience and my well-being better. And until then, I'll see you in the next video.